If you'd allocated just 10% of your portfolio to this AI stock in 2025, your gains could surpass Nvidia's by a significant margin over the next few years. While Nvidia has dominated headlines and mindshare, a quiet competitor is steadily beating it in key AI segments with impressive growth. This company's steady double-digit revenue growth in AI-focused products has flown under the radar, but now deserves investor attention. Most retail investors still don't realize this firm is a serious player in AI hardware and software combined. Nvidia's GPUs power many AI models, but this rival has carved out a diversified AI ecosystem worth considering. With a strong balance sheet, deep R&D investment, and strategic partnerships, this stock could offer significant upside without the hype. Unlike Nvidia's heavy focus on graphics chips and AI accelerators, this firm also focuses on AI software tools and enterprise cloud services. This integrated approach may drive more stable, recurring revenues as clients adopt their full ecosystem rather than just chips. Its AI software platform supports training and deploying models at scale, often complementing hardware sales. These services generate higher margin incomes and increase customer switching costs, which is key for long-term growth. The firm's AI hardware sales growth recently hit double digits in market segments like cloud servers and autonomous vehicles. As AI use cases diversify beyond just traditional computing, this company's products are gaining traction in emerging industries. Investors have historically overlooked this company's AI potential because it also operates in more traditional tech sectors. However, the shift toward AI represents a transformational growth driver that could significantly boost earnings over time. The stock trades at a valuation notably lower than Nvidia's premium, offering a more attractive entry point for long-term growth investors. This lower multiple could compress upward if AI revenue acceleration continues, presenting an undervalued opportunity. A key risk is fierce competition in AI chips from Nvidia and other chip makers like AMD or Intel, which could cap gains. Technological innovation cycles in AI hardware are fast, so staying ahead or relevant requires ongoing R&D investment and execution. Still, this firm's strong cash flow and diversified product portfolio help mitigate some competitive risks. Another attraction is the company's expanding partnerships with major cloud providers, which increase distribution and market reach. Cloud infrastructure is a critical AI growth area, and this firm's software often integrates with cloud platforms to optimize AI workloads. The deeper the integration into cloud ecosystems, the harder it becomes for customers to switch, boosting long-term customer retention. Financially, this company has demonstrated consistent revenue growth of roughly double digits annually, primarily fueled by AI and cloud investments. It also maintains a solid profit margin, balancing reinvestment in innovation and shareholder returns. Institutional investors have slowly added positions as awareness grows about this firm's AI growth story. For retail investors, building a position here could be a strategic way to diversify AI exposure beyond the crowded Nvidia trade. A recommended portfolio split might be 50% Nvidia, 20% this AI stock, and 30% diversified tech or cloud ETFs to balance growth and risk. This blend offers exposure to AI industry leaders plus a rising star poised to capitalize on AI's increasing complexity. Keep in mind market volatility, as tech valuations can swing on news or technological milestones in AI development. Monitoring quarterly results for AI revenue growth and new product launches will be key signals to adjust your investment size. Also, watch for shifts in AI hardware market share between Nvidia, this company, and others to gauge competitive positioning. If this company continues to build on its AI software and cloud ecosystem strategy, its growth runway looks promising. AI workloads are expanding across industries from healthcare to automotive, and this firm's diversified approach fits many use cases. Investors who understand that AI is more than just hardware chips may find this company a hidden long-term winner. It's also worth noting this stock has relatively less hype-driven volatility, which can smooth out portfolio risks. Growth investors focus on AI should consider looking past headline giants to find these promising under-the-radar leaders. Long-term, companies that integrate AI into multiple layers of the tech stack could deliver better sustained growth. This stock's combination of AI hardware, software, and cloud services may create a durable competitive moat. This makes it less vulnerable to short-term chip cycle swings or single product disruptions. If you're currently overweight in Nvidia, adding this company can hedge exposure while still riding AI's growth wave. Remember, diversification across the AI ecosystem reduces risk and helps capture broader market opportunities. A steady dollar cost averaging plan into the stock, combined with regular review of AI industry trends, is a smart approach. As AI adoption grows globally, demand for this company's integrated solutions should accelerate, boosting revenues further. Realistically, investors in this stock may see returns modestly outperform Nvidia's over the next 3 to 5 years. That's because of its lower valuation and expanding footprint in emerging AI markets outside Nvidia's core dominance. To sum up, this AI stock is quietly building strength through innovation, partnerships, and diversified growth. It may not grab headlines, but it offers a compelling risk-reward profile for forward-looking investors. This is a classic example of investing beyond the obvious. To find alpha where the crowd isn't looking. If you want more stock picks like this and detailed AI investing advice, comment below with your questions. Be sure to subscribe and click the bell so you don't miss our next deep dive into breakthrough AI companies. Taking action now while this stock remains underappreciated could be a defining move for your portfolios 2025 and beyond. Don't just follow the wave. Position yourself to ride the whole AI revolution with smart diversification. Remember, AI investing success is about patience, research, and balancing exposure across leaders and emerging winners. Your future financial health depends on spotting opportunities like this hidden gem before the crowd catches on. Make sure to set alerts for earnings announcements and AI product launches from this company to time your buys. Together, these insights and strategies can help you own the next generation of AI-driven growth companies confidently. Start with a small allocation today. Keep learning and steadily build your position as revenue and innovation trends confirm your thesis. By doing so, you create a resilient AI portfolio designed for long-term compounding and market leadership exposure. Don't miss this chance to quietly outperform by investing in an AI company that rivals Nvidia's growth quietly but effectively.